everyone, what's up? George here from the Millionaire Project. Just wanted to give you guys our weekly analysis of SPY. Again, if you're new here, SPY is a ETF that we watch that represents the S&P 500, so it gives you a gauge of what the overall market is doing. So last week, markets posted their best performance in what was months following the Federal Reserve's announcement that they are going to officially raise interest rates by the expected amount, which was 0.25% to 0.5%. So the 25-point base hike that we got an idea of from Jerome Powell's last meeting, I believe almost 2 weeks ago, was that he hinted to a 25-point base hike, and that is indeed what we got. So this was a number that markets have been expecting since the end of 2021, so it didn't really come as a surprise to us, which also resulted in a relief rally leading into the weekend here. So the move back from the markets carried the strongest momentum that we've seen in rallies all around, which is a very good sign going into this week. Something to keep in mind is that Russia-Ukraine tensions are still high, but investors as of this moment right now are more focused on the monetary policies within our own economy. So the approach from the Fed to raise rates to battle inflation is going to be a good thing for American markets and investors. They like that, hence the rally that we got. This isn't necessarily saying that we're putting the Russia-Ukraine tensions just completely off the board here, but we kind of have put them on the back end of our minds, so we aren't really looking at that at the moment. Any escalations can certainly change that. So looking at the week ahead, we don't have too many significant events or reports coming in here, so the focus is going to be on the sectors and industries that saw the strongest relative strength last week. So, tech was a major industry that's seen a huge bounce. So again, we're going to be paying attention to that. Overall, the market, they rallied and they also moved into a lot of small and mid-cap names. So all across the board, there are a lot of opportunities. Everything is looking plentiful, so we're going to have a lot of trading opportunities, whether it be in large cap techs or if we focus on small caps in the Russell. So looking at the technical levels here, you can see that we came down, created a double bottom right around this 416 mark here, at which point we bounced. This was the Fed zone here. We bounced above and broke above this, what was a resistance point at 430 with some pretty strong volume, as you can see. And now that we broke above this, now it becomes a support point. So we continued to move up and we broke above this other resistance point here of 440 again with some pretty strong volume. This was just a continuation rally from the Fed. Once again, this now becomes a support now that we are above it. And currently we are using this red line here, which is the 10-day moving average, as a resistance line around 445. So we closed out last week at 444.52, so that's going to be our main point to watch us get above for more bullish direction. The next significant support is going to be, the next significant resistance is going to be 448. And a move above this is going to put us back in a pretty bullish territory to go back and attempt to break this double top that we created here. So again, the safest zone does remain in this gray highlighted area here, which is anything above 458, 460, which is the double top that we created. So if we manage to push above this point here and break above this, we are in the clear again, and markets are going to be looking to come back towards these highs. So levels that we're looking at this week, we need a push above this 10-day moving average line here to take us to 448. If we get above this, this will now act as a support line. Currently, we're using 440 as a support, so we may consolidate in this range a little bit because of the push that we had. You can see here that at the RSI, we had a huge push, so if we continue to move up towards this 448, this is likely going to bring us towards the overbought level, at which point we're probably going to consolidate in here a little bit before breaking out to come back towards these highs. If we look at SPY on a shorter time frame, the 4-hour chart, you can see that on this rally here, the RSI is actually well into the overbought range. So again, we may just cruise around this 448 and 440 trading range here for a bit until we consolidate, bring these overbought levels down, and then continue to push up to make new highs. Short and simple this week, nothing crazy. Just wanted to give you guys a little update and everything that we're going to be looking at, and so that way everybody has a trading range to go off of. Good luck to everybody. Let's get it.